All right, welcome again to Tuesday's edition of the Daily Trade Strategy Briefing, April 28th, 2026. Let's see what we have on deck here today. NFA Compliance Rule 2-290C subparagraph 1. You know it, love it, living the dream, right? Living the dream. And maybe it's a nightmare for some. Living the dream. All right. Oh, yes. All right, let's take a look. Interesting overnight action, giving up quite a bit of yesterday's gain and then some. Some, with Iran's again, who knows the actual reason, but with Iran's latest proposal, probably to be rejected, and then some interesting, again, fears starting to reemerge, all right, of more military action. And then you had, I don't know, something about the United Arab Emirates leaving OPEC. Again, lots of moving parts. I am not Henry Kissinger. I have no idea how this is going to play out. So we just follow. Yeah, lucky me. So they we just follow the tea leaves in the price action. Yesterday again another new all-time high. Yesterday. Oh, one second. Let me get my trusty pen working here. It doesn't seem to be working for me. What's going on? One second. Or do I have the right one? Nope. Doesn't doesn't seem to be working. Probably. Oh yeah, it is working. What am I saying? Okay. Yeah, here we go. Oh, I see what's happening. It's fading out. Okay. Here we go. All right. So all-time high uh, overnight, and it pushed up to the D-level money box, all right, zone. And then, of course, once that broke, you can see here during the overnight, about 4 o'clock this morning Eastern, broke through the close, and then all the way back down to the opposite side, D-level money box. Libby had mentioned the 1618, all right, extension, percentage extension. And this also brings us into last week's. Let's uh, let's go over to this chart over here. Okay, this is last week's profile, and where were we? We're around 60s, right? 55, 60s. So this brings us right into this high volume node area from last week. So again, just think about this. A lot of activity took place, right, in and around this vicinity. Last week's value high, last week's value low, way down south, right? So we're basically prices back into last week's value zone. So we'll have to take again, watch closely. The previous week's value high is at 70s. And as you can see here, this rebound here off the deep low, okay, right up to the 70s. So 70s here become a dynamic line in the sand. And if you recall yesterday, what was yesterday's line in the sand? Oh yeah, 7170. So 7170 is would be our dynamic line in the sand here today. That's how I'm gonna readjust it. All right, 7170. So what would that mean, right? A CNC above that, all right, and then reestablishing a firm bid will go a long way to deeper recovery into yesterday's range, back up into yesterday's range. All right, so that's kind of one perspective. What's the prior low from yesterday? All right, 71's here. Oh, it's 70s, no, 70, yeah, 71, 71, not 70, 71. I'm thinking 70s. So 71, 71, all right, as the prior low. So again, all kind of confluence around, last week's value high level. Again, it's not necessarily a line in the sand, but it is a reference, key reference. Um, so yeah, so that's kind of where we are right now. We'll let the market decide, how it wants to handle this overnight move. Obviously, we've been seeing a lot of these corrective moves, right, down and then back up, right, down, and then so question mark here. Will we have another? Will there be another? Again, I'm asking a question with will here, by the way, and I usually don't say to, but the idea would be, if it does, okay, so a little bit more to the point, if it does clear the prior low and then hold any retracements, okay, you'll also have a reclaiming, okay, of the D-level money box. That's kind of in play at the moment, right? In this area. So if you're playing the D-level money box recovery, right, or triggered off of any of those reclaim levels coming out of the money box or the D level, again, you're slightly, you're basically right there at this stage. So again, your goal would obviously have the market, recover further. Again, needs to get above those 70s, right? And then here, kind of drilling it down a bit further. Let's move this out of the way. Drilling it down a bit further, looking at the active profile, right? This area right in here. All right, so this would become our active, right? SB. What's SB stand for? Sandbox. Okay, so this would be our active sandbox right here, the way, at least currently. So again, that kind of still coincides with the 70s, right? And then back down here to the, let's just call it 50s. All right, and of course we have our 60 right dead center there. All right, so that's kind of the 70, 60, 50 zone, mapping that out as our sandbox. And again, really not a whole lot beyond that matters to us as intraday traders, right? Again, what happened yesterday and all that, you know, that's in the wake, like a boat's wake. That's behind us, right? No going back, no reverse, only forward. All right, so there we have it from this point. So we'll see what happens. All right. Anybody have anything else? I don't have a whole lot else to map. Again, reclaiming prior low, again, 70s with a firm bid would push us back up to perhaps, back up to the prior opening area. All right. So if we clear, let's just say we clear the prior low cleanly, right? Establish dominance again above the prior low back into yesterday's range. All right, then some of the backup targets would be here, right? 85s, right? Again, you can kind of stage them out, 90s, right? And you just go 5 point increments. You probably shouldn't go wrong. I mean, we'd want to be targeting this area here, right? Where it broke below the prior close, consolidated a little bit, kind of in a downward move, but consolidated a bit during the overnight and then expanded lower, right? So kind of the domino effect there. And then if we get a move back up here, we would want to see potentially, recovery back up at least into this zone. We can't be saying, oh, it's going to recover the close until it recovers, these lower zones, right? So take it in stages, right? It's not gonna, it's not gonna just typically it's not gonna just shoot, straight up unless there's news, but that makes the price action very unstable. But the idea is, they pushed it, it tends to go down faster, right, than it goes up, right? So kind of, escalator up, elevator down, right? So, and again, and so what we talk about here, what a lot of the profile people talk about, right, is what's called repair, right? So, what is repair conceptually? Basically, repair is we've had structure that was built, okay, say in this area here, right? So you call that range or whatever. So that's a fair amount of structure that was built there. Structure being, lots of two-sided trade action, right? Density. Another way of thinking about it is a density area. But in any event, that structure now has been violated or broken with that elevator down last night. Okay. And again, they like to do this during the Globex session because there's less resistance, all right, for moves like this. So now, but that said, price has, moved lower. So does this need to be repaired? If you're a bullish player, right, we would want to see this, repaired back up here. I mean, that would be kind of a typical, once the sellers here get absorbed and flushed out, and there's no more, if there's no more selling, then you know then they would work on the working of it is working on trying to repair that broken area. Does not need to, but again, thinking about what an objective would be to get, if think about it, if you were a big institutional player and you bought in this area and now the price is lower, starts coming into today, you say, okay, I'm still in the buy mode. Well, then I want to buy some further weakness if you're still in the buy mode, and then the market would need to work on a repair. So typically that's kind of what it tries to do. Whether or not it's successful each and every time is obviously going to be different. But just something to keep in mind, again, does if anything, that what I'm saying is, does it matter? Like, should I take a trade here? Or should I take a trade there? I'm always looking for what the targets would be before I take a trade. What's the, trying to assess what's the likelihood, of it getting back here. So if I'm taking a long in here around the D level, okay, this high volume here, what do I need to see, right? I definitely need to see, you know, buyers come in and start getting, more aggressive, at least above the 70s. All right, that would be something that I would, want to see to help confirm, that positioning. All right. So we'll see what happens. Obviously, fluid every day, and let's keep it flexible and let's see what happens. All right, play your game. Always, always, always just play your game. And the market's open. RTH. All right, so if you took any of the recoveries there, that was the first pullback recovery. All right, here. So this was playable pre-opening. Sound over there is still not good. All right. Mark, I'm not sure what I can do with that. I've tried everything possible uh, to increase the quality of that sound over there. Tried different configurations. I can put the max. I can put the audio on max. I have the audio on max. Sorry about that. Mark, have you watched any of the recordings? How did the recordings come out? All right. I won't stress out. But I always want to have the highest quality possible. Let's see. That's better? Oh, okay. All right. Again, I have audio on maxed out on both sides over here. So, oh, the recordings are okay? Okay. Very strange. I'm actually running through two different computers. That's why I was wondering whether or not it over the audio driver on one of the computers was not adequate. So I'm running on two different computers. All right, well, we'll do what we can. Sorry about that. All right, so that's the kind of the lay of the land at this stage. All right, again, if we're looking for recovery, reclaiming above the D level here, we need to get above those 70s, that 70 zone. All right, for the bullish play on a repair. The A4 over here on the left, again, you can see we did get a few targets and then stop trail out on that. And that's what we have right now. The next short area would be here around the A10. That's around the 80s, 79, 80s. So if you're planning on that, okay, that would be a play into that area. And that would coincide right there at the 24-hour VWAP. Okay, so that could be a good location. Could be, I say. Don't know if it will, but certainly an area where we would consider. Yes, good morning to everybody across the globe. We are global through the magic of technology. What we've seen lately on every morning, we've seen kind of a move to an area and then just consolidate. Of course, we have FOMC tomorrow, and then we got a slew of mags earnings as well on deck this week. All right, but nothing currently active at the moment. We're just still in kind of observation and orientation mode. Again, looking for that potential area near the 7980s VWAP. And that's it at the moment. A lot of sitting at waiting. If you have any questions, let me know. Trading, as many of you know, is quite a bit of a waiting game, unless you're Super Mario scalper, where you're in there left and right every moment. Can you tell me what the last tweet means? Where's that tweet, Tom? Oh, POTUS's tweet? Oh, I don't know. I didn't see it. The one about Iran is the state of collapse. Is that the most recent one? I have no idea. Iran has informed us that they are in a state of collapse. They want us to open the Strait of Hormuz as soon as possible as they try to figure out their leadership. I have no idea. Like I said, Tom, earlier, I'm not Henry Kissinger. I'm probably the least qualified. Is the platform down? No. What, John, what part of the platform? You mean, no, we're broadcasting. I don't think it's down for anybody. Yeah. Yeah, I'm the least qualified, Tom, for that. All right, for you guys playing the opening range game, bring in the opening range charts here. Again, crude oil on the right-hand side did get stopped out. I tried a quick long, didn't hit the first target. We did get stopped in that. ES and NQ both long at the currently. All right, so they're both triggered long. Looking for that repair recovery kind of scenario. So we'll keep you informed on that. What do I mean by recover the D level? All right, and how do you enter that? Okay, so a recovery means price has penetrated or violated through that level or zone. Number one. Okay, so here's the D level money box zones. Right, so overnight, right, it violated that area. So recovery or reclaim, okay, just simply means getting back up through them and then holding that area. So recovering above the D level. Back. Remember, these D level money box zones, they're static, they're valid So the recovery would mean, to get back up above them and then hold above them. Now, in terms of entries, again, that's kind of your choice. You can use, you can kind of collectively use, kind of a first pullback scenario, okay, in here. So this would be one right here, the discount. All right. So what happened here? Prices went back above them, so it was kind of reclaiming or recovering back above them. And then you had a pullback into that zone, so this would have been a play. And then you had a secondary play here. Okay, Ram. So that would be the way to do that. Remember, it's part of the playbook, all right, that we've shown in the past. All right, John, I'll do that as soon as I can. All right, we're in our A10 area here. All right, so for potential short. All right, let's see if that can play out for us. If the sellers are still active, or if it was just another short trap, we'll see. Well, what is it that you missed? The playbook? Did you play hooky on that lesson? All right, so had you taken the recovery off the D level here, okay, again, your target is up here at these areas, okay, near the VWAP A10. And if you short off the A10 on that push up and back down, all right, then again you're in the process of scaling that one. So you had a valid signal there as well. Price likes to congregate around the VWAP. It's the congregation. D-level Dan got the D-level. D-level Dan. It's his that's his new acronym. All right, folks, what's the next move here? We're sitting there right at VWAP. What do they want to do? All right, the repair is underway. Again, what would be the repair that we spoke of? Right, the repair would be getting back up to the opening, right? 85s, right? 90, 95s, etc. All right, that would be part of the repair process. All right, you A10 here again. You get the signal here. If that played out, you had some scales in here. If you took those, So now what do we want to see? Anybody? What's the two kind of key levels here at this, well, kind of somewhat of a three level thing, right? We would have the low pivot. Okay, let's use this chart on the left, right? So you have a low pivot area here around the 64s. We have the prior low, so price is back now up within the range, prior range. So that's part of the repair, right, process I spoke of. And then the next key level would be for the bulls, that is, right, would uh, get back above the opening. So those are the three kind of spots, right, to be playing. Let me just show that, Ram, are you still around here? Okay. So let me just kind of show that D-level money box game playbook again. All right, this is our playbook. All right, let me just kind of, again, you can create one of these playbooks yourself, right? So I have a whole slew of different plays, just like any other coach would have on a team. So one of them is the D-level money box. So in terms of that play, okay, so typically, I think what might have confused you a little bit, but typically the idea would be, generally speaking, we come into the D level and then take a trade, right? And looking for the response off the D level or the money box areas, all right? And you're looking for a bounce, reversal play off of that, right? So as I state here, the D level or the money box, that is, right? They are entries. So in the case of price moving down into the D level money box, you would be buying them, on the downtick, if you will. All right, think about it that way. Okay, then the alternate play is if it holds and starts rallying back, you're taking the first pullback entry. Okay, do you follow that? Should be pretty straightforward. So that's kind of the typical play. All right. Now the reclaim play, let me just move this out of the way. The reclaim play is actually, I think, better. Right? Why is it better? Because the price has already violated. Okay, it's already violated that level. I don't know if it's less risk, but what you're getting out of it, though, is you're getting momentum back up through it. So if you're looking for a long, okay, if you're looking for the long play, then the long play is, you have the buyers already on your side pushing up through those levels versus you're buying them on the downtick. Does that make sense? Okay, so what you have on your side is you have the buyers already there pushing up through those areas, right? So having already violated them, now as you can see, coming up through these areas, okay, the buyers, so buyers are active, right? Versus buying them here, buying them here, buying them here on the down, you're still buying them there, same levels, okay, but you're buying them on the ups, which is really what, when you think about it, right? Right side pivot rule. So do you take the first pullback or when it breaks up? So it's all depends how you want to handle that, right? What do I mean by that, right? You could take an entry, on the way up and like put a buy stop at each level. Again, these are, let me just stop the shaking of the, drives me nuts when it does this. I'm trying to draw on it. Um, what you can do is put a buy stop, right? Put a buy stop. So as it's coming up, it gets triggered. As it's coming up, it gets triggered. Okay, if you want to do that, remember it's coming. So you have a buy stop above the market at those levels. All right, same thing if you want on that. Now, if it reaches to the point where you get a pullback here, you get your first pullback, you play your discount, right? You don't have to buy all three levels, right? Maybe you buy the lowest level, maybe the second level, and again, you can kind of add into how you wish. There's no right or wrong to the approach. I mean, one is, you know, I think what makes a lot of folks a little bit more queasy is buying a limit order, right, on the way down. I think that's the tougher trade for many because when you're doing that, you don't really, you got to put an offset stop somewhere. But what you don't have here on the way down, this is what makes it a little bit more challenging, is you don't have a pivot when it's reclaiming, all right, back up through. Well, you have a low pivot. That's the difference, right? And not only that, because it's moving higher, you have buyers. Here, what do you have? Of course, we have sellers. That's the difference. Which one do you play? How do you play it? That's really up to you. Again, I'm just giving you, options of how to handle it. Good question, though. Good, definitely a good question. And again, this whole sequence is the first, right? So that's the key, is that it's the first. So you play the first. And again, the goal would be to get up here back to VWAP area, A10. The A10 signal here on the short also played out. Okay, that signal. So you had, if you didn't take the D level money box trade, okay, which was fine, then you had an alternate play of on the A10 short. A little bit for everybody. All right. I don't think we have anything at the top of the hour, do we? Not that it really matters, I suppose, but what do we have today? Yeah, consumer credit, consumer confidence. Oh, okay, consumer confidence. I thought it said consumer credit. All right, so now we're kind of back into just slug and chug motion here. All right, that was kind of the opening play to get that accomplished. Of course, a retest of the overnight lows would be also a scenario, right, to play out. Let me do something here. Um, outside the zone. Let's go no. All right, guys. So just kind of sitting here for now, waiting for the next play, kind of back into observation mode, right? Orientation mode. All right. Again, hovering around the prior low. So again, what would need the bulls need to do? Again, continue to reclaim that prior low, establish dominance above that prior low back into yesterday's range, and then next would have to clear the upper pivot now. All right. So this upper pivot here, where is that? About 82s, 83s, right? So it would need to clear, right, back up through 70, 71. So we're sitting there right, pretty much right at the prior low. So this becomes now our sandbox, talking about adjusting the sandbox. Okay, so this becomes the new sandbox, right? So that's a current high. Essentially, this is the current low area, right? And that's where our playground is, right? Or our sandbox, as we call it. So then what needs to happen from here? Everything else prior to this is irrelevant now. it adds to the structure, but for the most part, it's irrelevant. All right, what is the most relevant areas? This high, this low zone area, and then what's happening now. Okay. Yep. 83-ish, right? 83-ish. I always say ish, right? 83-ish area, and you got your low pivot zone down here around about 63-ish, right? And that kind of frames out the sandbox. So the sandbox, is, again, you can adjust the sandbox as needed, right, to frame out what has happened and what the potential for the next play would be. All right, all right. Yeah, so let me know if anybody else has any volume issues on the other side there besides Mark. Again, I'm just trying to isolate that issue over there. Loud and clear on this side. Okay. Well, it looks as though this area, for the time being anyways, wants to be accepted, these lower levels, after the overnight drop. All right, so you can see here on the volume profile here, this area is obviously wanting to be accepted. And we also have, again, the multi-day composite profile here on the right-hand side of this chart. Again, there's your POC, multi-composite day point of control, again, right into this area. All right, and that includes last week's activity. All right. So, All right. Okay, volume good on. It was bad when Mark highlighted, but it's good after you made adjustments. Oh, okay, great. Thanks. Was it Arc Trader? Arc Trader. Thanks. Okay. Yeah, I don't know what I did. I just turned I just turned everything up to max. I had one side, the microphone on OBS. I had one side of the microphone on max. The other side, there's two settings on the audio mixer. One is the global, well, they're both global, but one is the mic aux and the other one is the desktop. So I think the desktop was set lower than the aux, than the mic aux. So I just maxed them out. Push everything to 10. That's what I do on my guitar amps. I, I just push everything to 10. Push everything to 10 on the Marshall amps. That's it. There's no other setting but 10. Okay, when I hit the other side, it went up by 100%. Okay, great. All right. Well, I guess that's that was the trick. Hopefully, Mark is hearing us a little bit better. Well, again, so now we have let's get rid of the D-level money box for a second. All right, let's kind of clear off the chart a little bit. Where is that? Let's clear off the chart. Try to make it a little bit smoother. All right. All right. So now, we've transitioned from a down move to a little bit more of a sideways balancing. All right. Let me see if this happens to this. Now, this doesn't show it as good. It's not enough time, at least on the 5 minute. Um, but yeah, but basically we've transitioned right now. So it just kind of, this was the down move coming into there, right? So now we've kind of balanced it out, right? So we're just kind of, you start framing things out again, right? So now, we kind of like, at least at this stage, we have some semblance of a range developing, balancing. Remember, balancing is synonymous with range. So we have some balancing going on. So again, what we do is we frame the upper and lower edges, which we've done. Now the next play is really kind of up to you. When I talk about not trading the middle, when you think about the range, right? Here's your high, the value, the low that we framed out, and there's your mid. Well, when you're in the mid here, I mean, it can go either way, right? I mean, whatever the order flow is at the time, it can go either way. So you know, there's no real edge to that. At least I don't find that there's a hard edge to it. We want to find an edge. We want to find, some level of probability that, that the market is more likely to go in one direction versus another. When you're in a kind of a balancing zone here, the market can snap back and forth, and nothing really has changed. There's no edge that, the buyers or sellers, neither the buyers or sellers have a clean edge, right? They're balancing. Some want to sell, some want to buy. Again, remember, we're talking the bigger institutional players, right? So they find some areas of balance and they're doing their thing. When that, when that balance, you know, kind of think about, another analogy I've used in the past is, a washing machine. I know, right? A washing machine. So, when the washing machine is spinning out, it can get out of balance, right? starts hitting the sides, ba-dum, 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 right? We have sound effects here too, by the way. All right. But it's out of balance. So you have to shut it, stop it for a second, and kind of rearrange, the contents. And then you start it up again, and it spins, it continues to spin, right? So it's back in balance. So when the markets are out of balance, what's out of balance situation? When the market's making a directional move, that's an out of balance situation, right? And then the market finally kind of works its way back into some level of balance. So that level of balance, we call range trade. Some people call it just choppy trade, whatever you want to call it, right? It's a balancing of an imbalanced condition. So two sides back and forth, right? So being in the middle of that balance area has the lowest edge. Well, if you go long them here, well, how do you know a seller doesn't come out? I mean, where's the edge where, it's more likely to go higher than lower, right? It's your 50-50 coin flip, all right? Uh, Again, we're trying to move outside of the balance area, trying to find some edge where we move outside of balance, whether it's to the downside or to the upside. And of course, we know they can extend a little bit beyond the current pivot areas and then revert back in, right? That's our, right, PKB, or look below or look above, and reversal back in. So when, those are playable where it kind of pops outside the range, right? You get the stop hunts going, right? To the upside, to the downside. Those are playable because what you're looking for a reversion back, to the high volume area. What we're really looking for is when this balance area is waiting for it to come up, stay outside that area and start wanting to push away, and seeing, increasing in volume and other kind of footprints to uh, to help the market, kind of discounting that the market is more likely directionally wants to move, right? So that's the idea about whether you want to trade inside the range or not. I just think it's a lower edge potential. Yeah, I'm not interested in trading the middle of any range. Maybe some people have success doing that. I don't. I have not. So it's not something that I'm going to focus on. Remember, we're trying to focus on our A plus trades, whatever those are for you. And also you want to identify the lower quality trades. Not to say that any of those trades cannot work, but what I'm saying is you want to focus on the highest quality. And sometimes, remember, the market goes from expansion to contraction. That's another concept, right? So what's the market's done? It expanded overnight downwards, and now it bounced back up, and we're in some period right now, right, of contraction or consolidation. Okay? So if you were playing overnight, let's just say you were playing overnight, or maybe this was during the day, right? The one on the left, the chart on the left. Where would be the play on this, right? You get a break lower, right? You see the break lower, and then you get kind of a pullback area, right? Following the break. And then what would be the expectation? A continuation. That's the expansion part. Okay, so that's an out of balance or an imbalance, right, condition. So that's where the market expands. That's the expansion phase. After it's run its course to wherever it's going to go, it markets typically kind of bounce back and then enter into some period of balance again. Now this could ultimately resolve into further expansion, but we don't know that now. We don't have enough evidence to kind of, that is certainly a scenario. So we want to have that, you know, on our plate at some point if more evidence, of that begins to develop. Okay, so we'd want to start seeing a shifting of the activity to begin to favor, lower. Well, what kind of activity would that be? All right. So if you kind of take a typical form of, let me just move the chart here a little bit. All right, let me just kind of move this up and give you kind of an outline of a range, right? So we have an outline of a range, kind of an ideal, right? So we came down into from overnight, right? We started bouncing, right? I'm just kind of throwing up some ideas here, right? So you're kind of going back and forth between the upper edge and the low edge of a range. So at this point, it's pretty balanced, right? Where the price went from the low to a high, established a high, retested the high, went to a low, kind of retested the prior low. Does this make sense so far? Just kind of an ideal type range, right? Well, there's no edge one way or the other of how, what direction this is going to break out. You can make an assumption that, there's a likelihood of, because of the down move, right? There could be a continuation down move, right, coming out of this range. Certainly viable assumption. We want to see some evidence of that. But if it's just bouncing back and forth the upper and lower edges of the range, there's not a whole lot of evidence of that yet. So the market's going through its balancing, compression, contraction stage. What I like to see is, remember, we highlight high, low, midpoint, right, as our references. So what I'd like to see, right, is if the market comes down here again and then makes another attempt to move higher, right, but starts failing to get back above the midpoint, all right, and starts, trading more at the lower edge of the range, then there is a potential for the market to explore lower. Now, it could be could be false, and it comes right back up. We've seen that many times, right? Our peekaboo trade or look below and fail. So again, but where's the idea? What we're looking for? I'm looking for what's called the shortening of the thrust, which is a Wyckoff term, right? So you get this move up, move down, move up, move down, and now I have a kind of lower highs here, all right? And again, this is just kind of an outline of this. So that's a potential for this to play out in a range kind of situation, right? So that's kind of what we're, looking for, right? What was some kind of clue that the market is, potentially maybe wants to, move directionally, all right, further. So what do we have for our range? We kind of, scouting it out here, right? Low, high, low, a little bit lower high. This is still kind of neutral in here, right? So, we want to see some further probing, down in this area, failing to get, back above the kind of this mid area right here. So that's kind of the idea. It's stealthy. I mean, when I outline a range play, I mean, that's an ideal situation. What's the current, what's the current lean right here? So just keep asking you, what's the current lean, right? The current lean is to the sell side right now in the context of a range, but it's to the sell. So at this point, so now break it down, right? We were talking about breaking things down, right? In that you outline, you frame out the entire picture, and then you start subdividing it, right? So you start breaking it down, right? So we broke down maybe this, right, where it's up here. Then we break down kind of this section. All right, we're below, so we've already identified some sort of a mid. So we're at the lower side of the subdivision, right? So the bulls need to do what? Not break it down any lower or have it or hold, right, below the edges here, and then move it what? Move it back up. That's what they need to do. But right now, okay, I'm just in observation mode at this stage, right? Because we're still really in the context of a balance pattern. Don't overcomplicate it. This is, we're trying not to overcomplicate things. You're trying to frame things out where, um, and if the market wants to make this a continuation lower, and it just really wants to kind of, long liquidate, you're going to have plenty of opportunity to see that unfold. And you'll more likely get an opportunity to get on board in a more clean way. If you're trying to anticipate that happening in while you're in a range, this is why we call it chop zone. Because what is likely to happen? You're going to get chopped up, right? So that's why I just refer to it. For all these reasons, my explanation, that's why I call it a very low edge area to play. Somebody may have a different opinion and different experience, which is perfectly fine, right? That's what makes the market go around, right? Somebody may love trading ranges. They just have high proficiency, you know, at doing so. Perfect. Just it's not my gig, you know. So I'm not saying that you should not trade a range. If you are to trade a range, understand how the range is constructed, what the typical range looks like, and then go practice in how you would trade that range. Practice it. Outline, you know, the parameters of how you would enter it, and go practice it, and know what type of trade you're going to be looking for and how you're going to manage it. This is the whole process. Just by listening to me is just a very small segment of developing an actual viable strategy that's gonna put some money in your pocket. You may have all the conceptual accuracy, you know, of all the various patterns that the market has developed, and there's books upon books of various patterns. I think one of the most comprehensive book is the one by Al Brooks on chart patterns. Has anybody read that one? I don't even think it's not a readable book. It's more kind of like an encyclopedia reference of particular patterns. Um, and then, according to his research, and again, that's his research, he's found out certain percentage, you know, uh, success rates with them. So I wouldn't necessarily take those, you know, 100%, those, but you could say, well, okay, this is what he found out. I'm interested in a particular pattern. How is it constructed? Let me practice it. Let me see if I can validate or verify the type of results that Al Brooks found out when he was doing it, right? So again, this is the process. 99% of the people, I'm telling you right now, 99% of the traders out there, Will not do that. Will not go through that process. I have my reasons as to why, and I'll keep them to myself, but 99% of the people will not do that. As Reagan said, trust but verify. And so that goes the same thing when you're talking with me. Uh, you can trust me, I suppose. Hopefully you do, but verify what I say. Okay. John South says, I have Al's book, Trading Price Action Trends, in my library. A, sh a self a shelf help book. Brush off the dust. Open it to page 63. Yeah. All right. Well, not much else going on at the moment. Yeah, we do have another positive 3-day cycle. Not a super cycle, but we do certainly have a positive 3-day cycle. Let's kind of just, I don't want to, yeah, let's do this another day. I'm not gonna, just want to quickly show you, let me see if I can put it up here. Oh, not this one. That's not the one I want. Hold on a second. This one. Okay. Um, so in this case, so here's our, these are the statistics that I keep track of, okay, on the cycle statistics, right? And so let me kind of zoom in here a little bit. Everybody see that a little bit clearer? All right. So what I'm talking about on this on the cycle, right? You know, the percentage, success rate, and all that. Again, we're tracking all this stuff. So here's a total positive 3-day cycle percentage, right? Some people don't seem to believe me. We currently have 92.46%, and that's price greater than the cycle day one low, right, on cycle day three. That's what I talk about 3-day cycle statistic. Okay, and I have some other statistics here that we track and so forth and so on, but this is kind of the one I'm always citing. All right. So when you think about it, you know, going through the various cycles, I mean, you know, 92.46. This was as of this past cycle. So that's gonna that 46 may change it a tenth of a percent or two for this cycle, right? So anyways, so that's, again, just another positive cycle play. Okay. All right. So here on our charts, right, there's your cycle day one low, right? We're on cycle day three, so price is greater than the cycle day one low on cycle day three. So that's the idea of that statistic. Okay. Oops, wrong one. Let me move that out of the way. Yeah, so let me just, Steve, just let me pop that back up here. Right. Okay. So, yeah. So here it is this is the 24-hour session over here. Okay, this is 24-hour. And even on the RTH section, right? I mean, not as robust as Globex, right? But I mean, still 86%. If you were just trading, the cycle parameters, right, for RTH only, I mean, you make the call on whether or not that's a viable play, staying in alignment with the cycle. All right, starting to get that rotation lower. And this is what I was talking about in terms of staying in alignment. All right, what was the lean that we just talked about? All right, the lean was to the sell, right? Price, again, not being able to get back above that mids. So now they're probing to the low. So this is all kind of makes sense, at least for me. Hopefully it's starting to make sense for you. And even if you're not in a trade, all right, everybody, wants to be in a trade. I get it. Everybody wants to be in a trade, but one of the first skills competencies that you want to master is just being able to read kind of the market, the dynamics of the market. All right. And what side should we be, perhaps leaning towards? Then at that point, once you're able to stay in alignment consistently, then you can start, that opens up the door to select trades that are only in alignment and not try to fade levels and go against, the directional lean. That is the biggest problem I've seen over the years. Everybody wants to counter trend trade. Go ahead, knock yourself out, because that's what's going to happen. You're going to knock yourself out. Right? You don't have the clout to go against the big boys. So stay in alignment with the big boys. Excellent. Getting better at staying in alignment. I mean, that's the idea, getting better at reading the market. That's the whole idea, right? You're not born with this stuff. It's a learned process. So what was the outline here that we were mentioning, right? Potentially a retest of the overnight low. Essentially, we're getting the retest of the overnight low. I mean, this is not magic. I'm not like, oh, I'm so prescient that I knew that it was going to retest the low. Far from it. But when you start thinking about and looking at this stuff from a scenario-based decision model, right? And ask the proper questions such as what would the bulls need to do? What would the bears need to do to accomplish what they want, more likely wanting to do, right? Bulls want it higher, bears want it lower. Simple math, simple idea. What do they need to do? What would be a more likely target if the market started slipping lower? Well, where was the lowest low so far? The prior pivot. That's usually going to be a target. Where's the prior high? That's usually going to be a target. Beyond that, who knows? But I can say, with high level of confidence that, yeah, the likelihood of coming down and retesting that prior low is certainly high on the list. Retesting of the prior high there that I'm outlining to the left is low on the list, given what? That the activity continues to kind of slide down this slope. It's this EMA slope, right? Even though we were balancing, remember, balancing happens for a period, and then they're going to try to move outside of the balance area. This is just what it does. So you can begin to see that lean unfolding in real time once you have that model of range activity, which we went over a short time ago. So be sure to replay the video here today to review that. And then the idea then is, okay, I'm going to stay in alignment with that. And then you start to say, well, do I want to, then you ask the question, do I want to play that? Do I want to position myself in accordance to that? And again, that's where you begin to outline, how you're going to play the current action. You can wait for a first pullback like it's happening now, or again, another one would be, right, a stacker over here, because this is all in a stacker positioning, right? So I'm going to go short. I'm just going to, probe one or two in alignment with that, and then, put your stop above and say, okay, it appears that, the lean is to the down. I'm going to just stay in alignment. So maybe you just, throw in a trade or two short side in alignment and say, I'm just going to trade short until, they rip it up and they take out a high. So that would be your stop point. I can't tell you to do that. I can just, outline things to do and the tools that we have. But if your goal is to always stay in alignment, that's kind of the process, right? Again, if you want to take a first pullback here, right, premium, that's available to you as well. Okie doke. All right, we're at about a minute, an hour 30, 10:45. We're gonna run the stream until 11 a.m. Eastern, and then we'll cut it off there as we do every day. And let me know if you have any further questions, comments, considerations. All right, we had a small long here on the A4 top left. Two scales out, stops at break even right now on the balance, and now we got a premium short on the right hand side, so kind of a two-sided play right in the middle area here. All right, A4 gets stopped on the balance, that's fine, and then we get first target out on the premium short. So longs and shorts here. Both bulls and bears have to eat, right? They both have to eat. You do. Okay, what do I want to do here? I want to. All right. Yes, that's the first pullback, the break of the range. That is the first pullback, break of the range, yes. All right, so we're just working the premium short right now. That's it. We got on going and really testing that overnight low area. Could be a PKB. Could be. All right, again, you also got a short of the A4. Okay, that played out for two targets. Stopped on the balance. Stopped on the balance of the premium after hitting that target one. All right, we're out of bullets right now. Wait for the next setup. All right, we're gonna be just ending here at the top of the hour. We've been online for about an hour and 45. Had some good questions, good discussion about the about range trade and then expansion from range. I had some trades come out the board already that played out nicely. All right, we will have this uploaded and recorded a bit later in the day, so be sure to come back and visit PolarisTradingGroup.com. Right, you know what, you know the address, right, in the video section. But in case you don't, let me post it up here. All right. All right, so we'll end the stream here, everyone. Hopefully it was informative. Hopefully it was educational. We always want to take something away from each video stream from an educational standpoint. And if we're able to put on a few good trades accordingly, you know, even better. But again, build that library of, you know, of plays, right? Your playbook, develop a playbook. Doesn't have to be large, but it should be a good solid few plays, and that's really all you need. So, all right, we'll pick it up again tomorrow. I will be on dual duty tomorrow between PTG and the Pitbull Traders room, along with Manny. So that will be tomorrow's stream, and check us out there as well. All right, have a great rest of your day, and we'll see you in the AM.